Morning everyone, Ryan here from Next Level Property Investing. Create an uncomfortable mindset to keep you pushing harder and harder all the time. Just before we get going, please don't forget to subscribe, hit the bell notification and drop any comments. Let me know what videos you want to see and I'll shoot them for you. Let me know any questions you've got and I'll answer them for you. And if you want to take your game to the next level, make sure you hit up nextlevelpropertyinvesting.com. Book a call with myself. We'll have a free strategy call, 15 minutes or so, and we'll see how we can take your game to the next level. So for me, as you grow, you'll want to push harder and harder and harder. But one thing that I found is as you get more cash flow coming in and your business is getting bigger and bigger, it's easier to sort of take a bit more time off, sit back a bit and not really push as hard as you do in the beginning when things are needed, when everything matters. You maybe haven't got that much money in your bank account and you really need to get it going. So that's a problem that you've got at the beginning. But problems you get as you grow, which I've started to find over the last year or so, particularly, is it's hard sometimes to keep yourself pushing and driving all the time. On the face of things, it might look like I'm out there and I'm doing stuff, I'm getting up early and everything, and I'm pushing hard and hard, which I am, but when I look at things at times, am I doing it as hard as I was 2 years ago, 3 years ago, 4 years ago? Probably not. So what I do now is I kind of really create uncomfortable situations for myself. It's easy to get in a comfortable position and then all of a sudden things aren't scaling as quick as you'd hoped. Things just aren't happening as well as you would like. You're not growing as quick as you are, and maybe your expenses continue to rise. So you need that sort of wake-up call. So what I do is I split my pots of money. So I have my investment pot, which I use to buy assets with. I have my my tax and my corporation and my VAT, and my corporation tax account. Obviously I need to put that away each month to make sure that I've got it when the time comes. And then what I do is I have a certain amount of money in my bank account, and when I get to that level, I then have a tiny bit more that I have, and every time I hit that next level, I put it away into what I call a profit account. By doing that, I'm not seeing money in the bank account too often, and it creates that sort of fear that I haven't got much money in the bank account. And what that does for me is it really helps me push and drive and make sure that I'm creating that sort of scarcity mindset. I don't look at the profit account much, so I don't really know what's in there. I just kind of, in the investment account, I like to make sure that's spent all the time. So I like to keep my accounts quite low, so it creates that scarcity mindset and it helps me drive on and make sure that every day I'm getting up, every day I'm doing the actions I need to do, every day we're trying to acquire more property, every day we're speaking to landlords trying to rent more property, so that the more units we get into the portfolio, done right, obviously, we've got to make sure there's good due diligence involved in it all. We've got to make sure that we're getting into the right properties, but done right, they're going to cash flow positively, and the more units we get, the more cash flow we get, and the bigger we can build. And that for me has really served its purpose over the last I've been doing it now for about 7 months, and I got to that comfortable point, and obviously COVID was a shock. That was a scarcity mindset in itself, so that made a lot of us react. We had to change, we had to figure out how we were going to make this business work through the COVID period, especially the serviced accommodation side of things, but then also after the COVID period just in general, and I think we're still battling with that a bit at the minute. Tenancy laws are changing. Obviously lenders at the minute are being a bit funny with lending. Products aren't as readily available as they once were, but fortunately for us, we've got a bit behind us. We've worked with the same sort of lenders for quite some time. They're used to our refurb. They're used to seeing the cash flow coming into our business. So hopefully, touch wood, we're not experiencing too many problems. But I have spoken to some other people that are experiencing problems, and they also have decent sized portfolios. So I'm not getting ahead of the game. I am fully expecting that some of the refinances that we've got in the process at the minute, we might get a kickback on, or we might get some disastrous down valuations. But all in all, touch wood, so far it's going to plan. But you've got to create the scarcity of it all helps you push. The scarcity of COVID helped me really. I was very heavily involved in serviced accommodation prior to COVID. I had a few HMOs, and we had our single lets, which is fine. But I'm so glad that I wasn't just all in serviced accommodation during COVID. And then since then, I've really made a focus on more HMOs. just to diversify the portfolio a bit. I've thrown a few more single lets in there that I would have probably normally ran as serviced accommodation prior to COVID. But having said that, I've picked up quite a few rent-to-rent SAs lately, and bought a house last week which I'll put into serviced accommodation as well. So I'm just now blending the portfolio, and I think it's really important to keep yourself diverse. I think you've got to make sure that you're not just hitting one strategy. Yes, focus on one strategy when you're just getting started out, and make sure that it's the right strategy for you, and make sure that it's profitable. Get all your systems and processes in place, get consistent with it, make sure it's cash flowing nicely each month, make sure you're growing it each month, and then once you've done that, move on to another strategy. I think you should have three. I have an acquisition strategy and I've got a rental strategy, and then within those strategies I have my sort of rental strategy. So I can buy properties and I'll either HMO them, single let them, or serviced accommodation them. I can rent properties and I'll either HMO them or I'll serviced accommodation them. So within the two different purchasing strategies or acquisition strategies, I've then got 2 or 3 rental strategies that sit underneath. So again, I'm just diversifying the whole portfolio from time to time. I've recently just changed a HMO into a serviced accommodation unit. So it wasn't quite working as a HMO. I was a bit dubious when I took it on. The numbers were good. The rental was good on it. The deal was good, so it was worth taking on. But I've always got the confidence that I can flip decent sized HMOs into SAs if they don't work, and I know that large SAs do work. Our 5 and 6 bedders are working really well for us at the minute. So it was a funny sort of setup. It's a HMO. It's a 6-bed HMO, but it is split in 2 parts with 2 separate entrance doors once you're inside the property, which lead into almost like 2 different flats. It's not though. It's not. They're not 2 flats. It's one house. But the way it's set up, and there's 2 kitchens in it, so I always knew with this one, if it didn't work, I could turn it into 2 3-bed SA units, and that's exactly what we've done, and it started the cash flow. The lack of living space, I think, really affected getting it rented as a HMO. We refurbished it. It was, it looked great, and we had a lot of viewings on it, but we just didn't get the uptake on the tenancy. So I quickly spotted this within a few weeks and decided it was time to get them split into 2 SA units, and we've been running that ever since, and it's been working well for us. So by having the diversification of the strategies, you can flip between them, and if one's not working, you can try it on another strategy. Obviously, if you've paid high rents or you've got a 2-bed, say, rent to SA flat, you can't really flip that into a HMO. That's not going to work for you. But especially on the bigger properties, you can sometimes flip them between the 2 strategies, and that's served me well. And I like to keep things diverse because it's hugely important to your success. You want to keep yourself scarce. Make sure that every day you wake up thinking, I've got to go to work today, I've got to make something happen, I've got to get a result. If you ever get to the point where that's not happening, you need to do what I did. Sort of just a little tactic, really. It's just a little strategy where I create a scarcity mindset by making my bank balance look like it's not got much in it, so that every day I get a text and it's not that great, and there I go after it. It forces me to push harder, and that's what I do. And there's many other different strategies that you can do to create that mindset, but by having that mindset, it helps you push forward, it helps you drive, and it helps you get the results that you need. So hope that helps. As always, have an awesome day, and don't forget to book your free strategy call over on nextlevelpropertyinvesting.com. Take care.